Get ready, folks, because what we're about to unpack is, well, it's potentially a total game changer. A revolution may be poised to reshape how you think about digital assets and your portfolio. And today, wow, we've got something really interesting.
Yeah, but before we jump right in, it's really vital we cover the disclaimer. Just want to be crystal clear.
Absolutely. Go ahead. Okay, so this analysis, this report we're discussing, it's designed purely for your information. It is not, I repeat, not personalized investment advice. Always consult a licensed financial advisor before making any investment decisions. What we're sharing today, it's built on AI-powered data mining, lots of web research, and expert market analysis. We believe the data is accurate as a publication, but we can't assume liability for any errors, or potential investment losses. And remember, past performance is never a guarantee of future results. Okay, your channel this is your comprehensive analysis.
All right, thank you for that. Super important. Okay, let's unpack this. Today we're talking about XRP's future-proof your portfolio revolution. Zeroing in on a new, pretty pivotal investment vehicle, the ProShares Ultra XRP ETF. The ticker is UXRP. And this isn't just, another fund. It's specifically designed to give you 2x, the daily performance of the Bloomberg XRP index. And get this. It only launched on July 14th, 2025, so it's incredibly fresh. By the way, if you're finding this kind of deep dive valuable, definitely hit that subscribe button, maybe leave us a comment. We genuinely love hearing what you want us to tackle next. Okay, so UXRP. Let's look at the objective here. Why does it matter? The report calls it a pivotal breakthrough in cryptocurrency investing. That's a big claim.
It is a big claim, but there's substance behind it. What's fascinating here is how this ETF bridges traditional finance, Wall Street, with digital assets. It makes crypto exposure accessible in a whole new way. It's really aiming to remove those barriers, the complexities of, say, owning crypto directly. No messing with digital wallets, private keys, exchanges.
Which can be daunting for a lot of people.
Exactly. So you get what they call institutional-grade access, but just through your regular brokerage account. Simple. And as you mentioned, the timing is critical. We're seeing analysts give spot XRP ETFs. Those are the ones holding actual XRPA, like 95% approval odds by the end of the year. That backdrop, that confidence, it really underlines the significance of a product like UXRP launching right now. It taps into that momentum.
That 95% figure is pretty staggering. So accessible, timely. What about the basics? Assets, fees?
Right. So at launch, or very shortly after, it had $29.5 million in assets under management, or AUM. The expense ratio is 1.67%, and it trades on the NYSE ARCA. It's structured as a 40 Act ETF using cash-settled XRP futures contracts traded on the CME, the Chicago Mercantile Exchange.
Okay, 40 Act ETF. That means it falls under standard investment company regulations, right? Familiar territory for traditional investors.
Precisely. It provides a layer of regulatory oversight and transparency that many find reassuring, similar to mutual funds they might already own. And the key is those cash-settled futures.
Right, cash settled. So you're saying no actual XRP is held by the fund. This is insane. Yeah. How does that work? And crucially, how do they get that 2x leverage?
Yeah, that's the core mechanism. The futures-based structure is really for compliance and operational simplicity within that 40 Act framework. It avoids direct crypto custody. To get the 2x leverage on the daily return of the Bloomberg XRP index, they use a process called daily rebalancing.
Daily rebalancing sounds intense.
It is. Every day they adjust their holdings, primarily these futures contracts, but also swap agreements to ensure they maintain that target 2x exposure for the next trading day. They're mainly using CME and Coinbase XRP futures contracts backed by cash collateral. So you get the price exposure, the leverage exposure, without touching the underlying crypto.
Okay, that makes sense. Daily adjustments. So what's actually in the portfolio right now, or as of the latest data, and how's it performed in these early days?
Well, looking at the snapshot from July 18th, 2025, just a few days after launch, remember the NAV, or net asset value, was $53.82. That was up almost 7%, 6.96% from the day before.
Wow, strong start.
Yeah, and the market price was right there too, $53.91, up about 6.04%. That close tracking between NAV and market price is a good sign, suggests it's trading efficiently. And obviously that performance reflects both the underlying XRP price moving up during that period and that 2x leverage amplifying the move.
And the holdings breakdown, you mentioned futures.
Right. If you peek inside, it's mostly Coinbase XRP futures, about 59.2% exposure. Then you have CME XRP futures at around 40.5%. There's a tiny bit, less than 0.5%, in something called Coinbase XRP Nano 2. The key takeaway here is it's all within 100% U.S. regulated futures markets. It's designed to be pure play XRP exposure, but with high beta specifically, a beta close to 2.0 relative to XRP's price movements.
High beta, meaning it swings harder both ways.
Exactly. Amplifies gains, but also amplifies losses. Which brings us neatly to the next crucial topic, risk.
Yes. Let's definitely dig into the risks. With 2x leverage, there have got to be some significant warnings. What are the key metrics we need to understand?
Yeah.
It's absolutely critical section. The big one is something called path dependency. Because of the daily 2x leverage target and that daily rebalancing, the returns over longer periods, say a week, a month, a year, can and often will deviate significantly from just being 2 times the return of the underlying XRP index over that same period. Compounding effects in volatile markets are the reason.
So if XRP goes up 10% in a month, this ETF might not necessarily be up 20%. It could be more or it could be less.
It could be less, potentially significantly less, especially if the path XRP took over that month was very choppy up and down. The daily resets mean the compounding works differently than a simple buy and hold 2x leverage.
Okay, that's a really important nuance. You can't just set it and forget it, expecting 2x the long-term return.
Definitely not. That's why the report highlights things like the max drawdown already hitting negative 38.6%. That's a steep drop, showing the potential downside. Volatility is marked as high, and that beta to XRP of 2.0 reinforces it. Aims for 20% move if XRP moves 10% that day. But tomorrow is a new day, starting from the new level. The core risks are labeled leverage and compounding risk. Active management is key.
Minus 38.6%. Wow, you won't believe the swings possible here. So active management is a must. What about the costs involved and any potential tax wrinkles?
Okay, costs. The expense ratio is 1.67%. Now that's higher than a standard unleveraged ETF. For comparison, the report mentions XRPI, a 1x XRP fund, has an expense ratio of 0.94%. So you're paying a premium about 73 basis points more for that leverage.
That's the price of amplification, I suppose.
Pretty much. It also distributes monthly, and because of that daily rebalancing, it has a high turnover ratio, which can sometimes have minor cost implications within the fund. Now, the tax side is interesting. There's a potential advantage. Because it holds futures contracts, UXRP may qualify for Section 1256 tax treatment.
Section 1256. What does that mean for an investor?
Potentially, it means 60% of any capital gains could be taxed at the lower long-term capital gains rate and only 40% at the higher short-term rate, regardless of how long you actually held the ETF shares. Could be a nice benefit.
Potentially.
Yeah, potentially. It's complex, depends on individual circumstances. Tax laws can change. So definitely not guaranteed tax advice. You absolutely need to talk to a tax professional about this.
Understood. A potential benefit, but consult your advisor. Okay, costs and taxes covered. How easy is it to trade this thing? What's the liquidity like, especially being so new?
Good question for a new fund. The early signs are pretty decent for a leveraged crypto ETF. The average daily volume is reported at 887,656 shares.
That sounds like quite a bit of activity.
It is. And the 30-day median spread, that's the gap between the buy and sell price, a key measure of trading cost, is pretty tight at 0.34%. That suggests it's relatively efficient to get in and out.
Okay, so volume is there, spread is tight, and the assets under management, you said $29.5 million.
Correct, $29.5 million AUM. And interestingly, the report notes that during its peak launch week, the volume actually hit 1.32 million shares traded in a day.
Wow. So despite being new, there's some serious action here. Stick around, because the competition in this space is intense. And hey, if you're finding these insights incredibly useful, please make sure you're subscribed and maybe turn on those notifications. You really don't want to miss our next deep dive. All right, competition. This is where it gets really interesting. You mentioned it. UXRP isn't launching in a vacuum. How does it stack up?
No, definitely not a vacuum. It's stepping into a pretty crowded room, actually. There are established players. The big one seems to be XXRP. It also offers 2x leverage, but has a much larger AUM, like $327.1 million. Its expense ratio is a bit higher at 1.89%. And its recent performance was strong, a one-month return reported at 105.4%.
Wow, 105%. That's massive. Who else is there?
Then there's XRPI. That's the unleveraged 1x fund we mentioned earlier regarding fees. It has about $106.3 million in AUM, a 0.94% expense ratio, and its one-month return was 50.1%, reflecting the underlying XRP move without leverage. And another 2x leveraged option is XRPT. Smaller AUM at $44.9 million, same 0.94% expense ratio as the 1X fund, interestingly, and its one-month return was even higher than XXRP's at 112.3%.
Okay, so UXRP comes in with the smallest AUM, $29.5 million. But you mentioned ProShares. That's a well-known ETF provider, right? Especially in leveraged and inverse funds.
Exactly. That's UXRP's potential edge. While it's starting smaller in terms of assets, it benefits hugely from ProShares' reputation, their distribution network, and their experience managing these complex leveraged products. Plus, being listed on NYSE Archive gives it broad accessibility, especially for institutional players.
So smaller now, but maybe with room to grow fast because of the brand and platform, you won't believe how much growth room this implies.
That's likely the thinking. It needs to capture market share from XRP and XRPT, but the ProShares backing is a significant factor.
Makes sense. Okay, shifting gears slightly. What are the analysts saying more broadly? You mentioned the 95% spot ETF approval odds.
Right, that's a major theme from Bloomberg Intelligence. Analysts James Seifert and Eric Balchunas are quite bullish on spot crypto ETF approvals, specifically raising the odds for XRP spot ETFs to 95% by October 2025.
October 2025. That's not too far off.
No. Seifert noted that the engagement the SEC is having with potential issuers is seen as a positive sign overall, and Balchunas specifically bumped their odds up from 85% based on that increased communication. If we connect this to the bigger picture, this widespread analyst confidence creates a very positive sentiment, a sort of tailwind for futures-based products like UXRP2. Approval of spot ETFs would likely boost the whole XRP ecosystem.
Okay, positive sentiment from analysts. But we need to look at the potential shocks, too. The report includes stress tests. This is where it gets real. What happens if things go south?
Yeah, the stress tests are sobering and reinforce the leverage risk. They estimate that if there's a broad market drawdown of, say, negative 20%, the impact on UXRP could be a staggering negative 50% to negative 60%. That's the 2x leverage really biting on the downside, plus potential compounding effects worsening it.
Minus 50 to 60% from a 20% market drop. Wow. This is insane. What about interest rate shocks?
Good point. The report models a plus 200 basis point rate shock. That's a 2% rise in interest rates, quite significant. The estimated impact there is a negative 20% to negative 30% hit to UXRP.
Okay, so highly sensitive to both market direction and interest rate changes. Definitely not for the faint of heart.
Precisely. It underscores that this is a tactical tool, not a core long-term holding for most investors.
So given all the opportunity, the structure, the risks, the competition, what's the final verdict from this analysis? What's the actionable thesis?
The report lands on a tactical buy-why recommendation.
Tactical buy. Okay, why?
The rationale is basically twofold. One, UXRP is seen as a good vehicle to capitalize on that institutional adoption momentum for XRP, especially with the regulatory tailwinds from the high spot ETF approval odds. But two, and this is crucial, it strongly emphasizes that the leverage structure demands active management. You have to actively monitor it because of those compounding effects and path dependency. It's tactical for a reason.
Right, not buy and hold. And the report suggests specific entry points.
Yes, it mentions considering entry in the $50, $55 range on any weakness, suggesting maybe waiting for a dip rather than chasing a rally. And again, it flags that the future structure might offer those tax considerations we discussed, which adds to the tactical appeal for some accounts.
Okay, tactical buy, watch your entry, manage actively, and be aware of potential tax angles. Got it.
Yeah.
Let's summarize the key takeaways and run through that decision checklist for our listeners. So, takeaway number 1, UXRP offers institutional-grade XRP exposure through traditional brokerages, crucially without needing direct crypto custody. Big plus for many.
2, those 95% spot ETF approval odds are a significant factor, creating positive momentum that could lift all XRP-related vehicles this year.
3, active management is absolutely essential due to the 2x daily leverage and compounding effects. Returns can diverge significantly from 2x the underlying over time.
4, UXRP faces stiff competition, particularly from XXRP with its larger asset base, even though institutional demand for regulated XRP access is clearly growing.
And maybe a 5th point. Keep an eye on XRP's price relative to its all-time high, $3.84 mentioned in the report. And any breaking regulatory news, these are key catalysts. It's all about navigating this complex landscape.
Well said. Now, for the decision checklist, this is really about asking yourself the right questions. We can split it. Questions for maybe beginners or those newer to leverage, and questions for more seasoned pros.
Good idea. Let's start with beginners.
Okay, if you're newer to this kind of product, you should verify. What are my brokerage commissions for trading ETFs? Do I truly understand how 2x daily leverage works, including that path dependency? Also, what's my genuine risk tolerance? Can I stomach potential 50% or greater swings? Have I considered the tax implications for my specific situation? And critically, what's my exit strategy before I even enter?
Excellent points. Now for the pros. What should they be scrutinizing?
For more experienced traders or institutions, the focus might be sharper. What are the actual daily rebalancing costs and potential slippage impacting performance? How might futures contango or backwardation, that's the difference between futures and spot prices, affect returns over my holding period? They might also look at cross-margin opportunities if available, closely analyze the tracking error versus spot XRP, not just the index, and understand the securities lending revenue splits, if any. It gets quite granular.
Definitely more technical. So it boils down to self-assessment. This raises an important question. Are you ready for this kind of dynamic, leveraged investment?
Exactly. And maybe one final thought to leave people with, stepping back from the immediate ETF details.
Please.
Beyond the numbers, think about what this new ETF, and others like it, truly signify. It's about the relentless march, really, of traditional finance, of regulated structures, into the digital asset space. This isn't just about investing, it's arguably about the very evolution of how value is stored, how it's exchanged, how it's regulated globally. How will this growing institutional adoption, this TradFi meets DeFi convergence, ultimately redefine the future of currencies and investment itself? Something to ponder.
That's a fantastic point to end on, a really provocative thought about the bigger picture. Make sure you subscribe to the deep dive and definitely turn on those notifications. And please don't forget to hit that like button and tell us what you think or what you want us to cover next in the comments below. Thanks for joining us.